Now let's talk about Twitter holding up pretty nicely here given the downdraft. And the story here on the fundamental side is this increasing user growth. So why do you have your eye on Twitter here?
So a couple of things. First, we love the technical pattern. It's got a nice cup with handle, which as our viewers know is historically a very good technical pattern for price appreciation. Second, one of the things that's happened at Twitter that's important is that, as you mentioned, users have turned around. User growth was decelerating. In Q1, it turned around and started to reaccelerate. It accelerated again in Q2. If you look at their daily average users, it's gone from 122 million last year to 139 million now. And also, they're expanding into video content, which we think is a very exciting space. They've signed an agreement with Comcast to do live broadcasting of the Olympics. They've also got new deals with ESPN and with Viacom. So we think the increase of video content on Twitter is going to lead to much more user engagement and really portends well for the company over the next year.
Right, so it sounds like the fundamental story is there, the chart is holding up nicely, as you mentioned, but with this backdrop of market uncertainty, wouldn't be advised to be aggressively buying shares here, would it?
We'd really like to see the market start to stabilize. The market is moving through its 50-day moving average on both the S&P and the NASDAQ. We think the next reasonable level of support for both averages is the 200-day moving average. That's about 3% down from where we're trading. So we'd really like to see the market start to stabilize before we want to put a lot of new capital in. Again, you've had a big move in the market, you've had a big narrowing in the number of names participating, and you've had some negative action in the bond market in terms of predicting the economy. So we think investors should let some of this settle before getting more aggressive on buying stocks.